Well, let's take a look over at the markets, and as we enter the second half of January, the persistent trading range continues. But what does this mean for you as an investor? Well, Michelle Schneider from Market Gauge is here to break it down for us. Michelle, lovely to have your company as always. Now, the significance of this here is once we have that trading range to go off, it's easy to see trend reversals as well as continuations. What exactly can be assessed from the ranges going forward into 2022?
Well, the reason why we're so interested in the idea of trading ranges is because we're at a point now where the whole consumer sentiment and retail investment sentiment has gone from buy every dip because the market's just going to go up to almost a panic situation that the market is going to crash and we're going into a recession. The reality is that this is a true reflection now of what we're seeing, which is kind of a stagflation, stagnating market. And because the Fed policy, even though expectations offer so many rates, is still relatively not understood fully what they're going to do because we have a contracting economy for many reasons. So hence the trading range. So what this does is it gives you an opportunity now to have a floor of support. If that support breaks, you don't need to panic. If you have new stuff on in your portfolio, you can get out and find a new floor. It makes it difficult to trade because you're not going to see a tremendous trending market like we've seen, and that's down or up. But nonetheless, there will be opportunities. And of course, when you have a trading range, the best thing that comes out of it is that things that break out over the trading range or break down under the trading range are also where you have opportunity.
Yeah, thanks for breaking it down for us, because it sort of sets up the next 6 months or so, doesn't it, as well, that trading range. I mean, transportation is in a bullish phase at the moment. Does this mean we will come back from COVID? We will travel normally again?
Well, we sure hope so. I mean, at some point, like everything being cyclical, this has to go away. And we're seeing a lot of optimism starting to emerge again. Obviously, I was just listening to the Boris Johnson story, and he's optimistic. And we are here in the United States as well, that Omicron has been devastating to a degree, but not nearly as devastating, and that people will travel and go out to eat and go to hotels and go to cruise lines. And that's why transportation is so interesting, partly because it reflects that area, partly because it's actually an outperforming sector versus manufacturing, which has been weak, and partly because it can actually go side by side a little bit with inflation to a point, and clearly we're seeing some real inflation indicators here, especially today with precious metals finally starting to get a clue as well.
What about this pressure from, I guess, executives in regards to 5G around United States airports at the moment? Is that weighing on the markets at all?
It is, and it's definitely weighing on the airlines here. In terms of some of the actual companies, those stocks have been beaten up for a while and they're having trouble coming back. But I think if we step back from the actual issue itself and think about what it means, 5G was a huge part of the infrastructure package. And so as such, it's another thorn in the side of the current administration in terms of not only its credibility, but its sustainability to be able to deliver on the promises to make our infrastructure grow.
Michelle, what about the labour force at the moment? We know obviously the pandemic shifted it like never before.
Well, yes. I mean, there's been a record number of people retiring. There are still about 11 million jobs open in the United States. I know if you go anywhere now, you see how hard it's been with labor issues. Restaurants don't have enough staff. We had 20 restaurants, for example, close the first 2 weeks in January because they just didn't have the staff to support them. But again, this will be something I think will never come back to the way we had it before. Too many people now understand the idea of working from home. And many, many people, by the way, $25 trillion worth of new accounts were open for retail investors over the last couple of years. That's huge. So people have discovered investing, which is interesting. So yeah, the landscape has changed. But at some point, I think we'll see some level of normalcy, and that will help obviously with the recovery and with supply chain issues as well, and we'll start to get on the other side of this inflationary narrative, but it's going to take a while.
Well, it's good to hear hopefully some normality coming our way, and not to mention the $292 billion in stocks as well. Michelle Schneider, thank you as always for your company.
Thank you, Holly.